So let's start off our first lesson about the power of 3, which is the open high low close and the open low high close of a candle. Now what is open high low close and open low high close? We also call this the power of 3, right? So accumulation, manipulation, distribution of a certain type of candle. Understanding the open high low close or the open low high close of a candle is crucial in everything from daily bias to entries. It's a foundational understanding to my trading, and the concept is fairly simple yet highly effective. We all know the daily candle opens up at 5 p.m. EST and closes at 5 p.m. EST. However, we are gonna use this understanding from 12 a.m. EST to 12 a.m. EST, which is the true day open. And we call it true day open because this is where the algorithm starts its true day, right? So we're gonna be talking about 5 candle formations. We're gonna be talking about a bullish candle, a bullish reversal candle, a bearish candle, a bearish reversal candle, and then at the end about a consolidation candle, which is indecisional. Right, so over here we've got a bullish candle and a bullish reversal candle. So a bullish candle is a open low high close, right? Let's outline that over here because we open up the day over here, make a low, continue to expand during the day, creating the high of the day, and then closing out eventually. Now, most of the time when we have these types of candles, London session or London kill zone creates low of the day, and then we expand higher during London and have a New York retracement into a continuation. And then with a bullish reversal, we have a longer wick on the bottom, right? So we have a open, and this longer wick on the bottom can be comprised of a sell side liquidity run on the higher time frame, thus having a reversal and then continuing expanding up higher and closing at the end of the day. So over here we've got two bearish candles, right? We've got that bearish candle and a bearish reversal candle. A bearish candle is a open high, low close, right? So over here we open up, we create high of the day, expand lower during the day, and eventually close out the day down here, thus having a bearish candle. Now again, just like with the bullish candles, the high of the day can be formed during London session most of the time, expanding and having a New York continuation to close out the day bearish. With a bearish reversal candle, we can see again we have a longer wick on the top this time. This longer wick can be a buy stop rate, or we can hit a higher time frame bearish premium array, right? Like a higher time frame fair value gap or order block, causing a reversal for the day, continuing down lower and expanding lower until we close out the day bearish. And finally, that indecisional candle. The name already says it, right? The candle has no idea where it wants to go, leaving a relative equal top wick and a relative equal lower wick, and looks kind of like a doji, right? Right, so over here we've got a British pound US dollar daily chart. We've got outlined our premium and discount levels, right? From this discount low into this discount high. We can see these candles forming what up on top of this? Buy stops, right? And then what do we have over here? We've got a bullish order block, right? So when we're looking at a bullish candle, we're seeing a low created over here, expansion higher, taking out those buy stops, and eventually closing out the day bullish. But how does that look like on a intraday chart? We've got a intraday chart for the British pound and the US dollar, 15-minute chart, right? We've got that higher time frame POI over here, that bullish order block. Now, where do we create low of the day? Below that New York midnight open price, right? So let's outline that over here. Draw out that New York midnight opening price, 12 a.m. EST, right? Low of the day is being formed down here during London session. A lot of times we form low of the day during London session, and that makes trading New York a little bit easier, and I will explain later in this mentorship why. Over here we got that daily candle, right? We open up, create a lower wick, and then expand for the rest of the day with a bullish daily candle. Low of the day London session, New York retracement into continuation until we reach that buy side liquidity target and closing out the day over here, leaving this as a bullish candle. Over here we've got a Euro USD daily chart, right? Where is our discount and premium levels? We go from this low until this high, right? 50% level is in discount. Now over here, we know if we're dropping lower and lower and lower, we're going into discount levels. And are we hitting a higher time frame PDRA? Yes, we've got that daily fair value gap, right? So we're going to be talking about a bullish reversal candle right now, and we can already see it's forming down here. And why are we reversing? Because we took out sell side liquidity, right? And then we're hitting a higher time frame discount array. Now, how does that look like on a intraday chart? Again, we have a 15-minute chart for Euro USD. We're hitting that higher time frame POI, right? We took out all those sell side liquidity and outline this with more annotations. Again, always outline your New York midnight opening price, right? That is the true day open of the algorithm. We want to be buyers below this line and we want to be sellers ideally above this line. So over here, we've got an indecisional London session, right? Probably some high impact news later in the day, could be possible. With New York session, we drop lower, creating low of the day in New York. We run all that sell side liquidity and hitting a higher time frame PD array, right? That discount fair value gap, and then having a New York reversal profile for today. And you can see this longer wick because we opened over here, right? And actually, if we take a daily candle, we open at 5 p.m. But that longer wick is because we dive deep down below that New York midnight open line and then closing out the day higher up. So leaving this longer wick, thus having a bullish reversal day. Right, over here we've got a Euro USD daily chart. We've got an old high up here, external range liquidity buy stops over here have been purged, and then after we run buy side over here, it's likely that we have a bearish day afterwards to fill up an imbalance, for instance this imbalance down here. So how does that look like on a intraday chart? So we got this Euro USD 15-minute chart, right? We ran buy stops above this red line, right? So we are having a bearish day afterwards. So how does that look like with more annotations? High of the day during London session, right? Most of the time, London session creates high or low of the day before a higher time frame PY has been hit, right? So draw out your daily opening price over here. We see we trade and accumulate sell stops above here, taking out these buy stops. And you can see on a daily candle that looks something like this. An upper wick has been formed and the rest of the day will expand lower and lower and lower. During New York we have a retracement into premium levels and then we continue down lower until we reach our closing price, forming this daily bearish candle. Now let's talk about a bearish reversal candle, right? So why does it reverse? Most of the time we hit a higher time frame PD array or we run buy stops or sell stops, right? So in this occasion, we've got these buy stops up here being ran and then we see this longer wick down and closing the day out bearish. So how does that look like on a 15-minute chart, a intraday chart, right? As always, draw out your New York midnight opening line, right? Over here. Draw it out in time all the way to the right for the close of the day. And then with this longer wick on top, we need to have a expansion higher first, right? So we're expanding higher first, having a New York session reversal profile. We run buy stops on our higher time frame and then start to decline after, and then closing out the day over here, forming this bearish candle. So think about it, right? Accumulation, manipulation up higher into those buy stops, and then distribution lower. So that's the power of 3 of a daily candle. Now let's talk about a consolidation candle or an indecisional candle, right? So the market obviously has to be in a consolidation and the market has no clue where it wants to go next, thus creating a indecisional candle. So how does that look like on a intraday chart? You can already see it when we draw out that New York midnight opening price. It's just straight up, up, down, up, down, up, down, right? So we're creating a high of the day, going back to that New York midnight opening price, creating a lower today, and then just keep hanging around that New York midnight opening price. And this is an indication too of a consolidation day. And you can also say it's kind of a seek and destroy profile, because we just run buy stops and sell stops and returning back into the range. And then on a daily candle, it looks something like this as an indecisional candle.